Right, hello everyone. Good morning, good afternoon, and good evening, wherever you are in the world. I hope you are doing well. So, as always, welcome to the VT Markets Trading Vault webinar series. This is the fourth episode, I believe, now in this series, educating you guys, passing on some education, and trying to help you along your trading journey. So, as always, if you could just introduce yourself a little bit, let us know where you're coming from. That would be great. Let me know where you're sort of like what your like level of experience you're at the moment, just while we wait for some other people to join us. As we go through the webinar, we will obviously please do ask questions as you go along in regards to the content. We will also ask you to stay on at the end just to fill out a short questionnaire for us, a short survey, which will allow us to tailor these webinars to what you desire as well, and the sort of types of education that you would like. So, hi Denise again, welcome back. Patrick, hello from France. We've got Mark from the Philippines. Je suis français, Patrick, ça va? Javed, UK beginner, Cyprus, Philippines, yeah, Morocco, Canada, yeah, plenty, as I say, all over the world here. So great to see so many people from different places. It's great to have you here. Hope those of you that are joining us and rejoining us from previous webinars, that means that you are finding these sessions useful. If this is your first time, I hope you can get some real added value into your trading from these sessions. Please do also, as I say, sign up to the future webinars. We're going to be doing these every other week. So once every 2 weeks, we host a new session, a new topic, covering all topics within the trading education space. Everything that you need to become a successful and profitable trader. So, without further ado, let's get on with the webinar. So far in this webinar series, we've covered risk, we've covered a bit about price action as well. But today is going to be the mindset side of things. Okay, so it's very, very important, the mindset. Now, we're going to talk a little bit about this in a little bit, and it is an area that a lot of people neglect, and they don't put enough emphasis on it. And without the right mindset, you really cannot become a successful trader. Now, that doesn't just mean the mindset to believe that you want to become a successful trader. It's about understanding your emotions, and the place they have within your trading, how they can impact your trading, and the things that we can put in place to limit their impact on our trading decisions, basically. And it's about the language and understanding that we have around the mindset. So we're not going to go. We spent quite a bit of time in charts and stuff recently. We're not going to spend too much time within the charts today. Today, as I say, is going to be more about the mindset. But whether you're a beginner, whether you're experienced, whether you've been trading for a while, I'm sure you will have experienced some of the emotions that we are going to talk about today. In fact, I know you will have done, because emotions are just part of who we are. They are a natural part of our human existence. So there's nothing to fear with them. They are part of us. It's just about learning to live with them and not letting them impact our decision making. So, as always, please do fire questions into the chat box or into the question and answer box. I will answer them as we go through, if they're relevant at the time. If not, we will have a bit of a Q&A at the end to ask any questions. And if I do miss a question, then I do apologize. It will not be on purpose. If I have got to the end and I haven't answered a question, it just means that I've missed it, and I do apologize. If you could please repost it, and I will make sure that I will answer. I want to make sure that all of your questions are answered here today. So, Vince, I'll read the previous sessions. I know the previous sessions have been recorded. If you could contact your account manager at VT Mock. There we go. So the events team will put the previous webinars into the chat box there, the link there. Okay, so as I say, today we're talking about mindset. Okay, and these are the hidden psychological obstacles that actually stop traders from achieving their goals. So just a quick introduction to myself for those of you that are new. Obviously, I know I can see some very familiar names here, so I'm sure you have been in the previous sessions that we've had. But my name is Ross Maxwell. I am VT Markets Global Operations Strategy Lead. I provide high-level educational content for traders of all levels. This includes sort of media obligations. So I don't know if any of you have seen me on the Commodity Talk with the Economic Times recently, but please do tune into that sort of thing and support us. That'd be much appreciated. And it also gives great insights into the markets and the volatility that we're receiving at the moment. I am a professional trader and investment manager. I've got more than 20 years experience in trading. I started my career in London. I spent several years in Hong Kong as well. And for the last decade or over a decade now, I've spent as an independent professional trader. I'm also an award-winning trading coach and mentor through my online trading education company, which is Keyzone Traders. But that is enough about me. As I say, we are here to try and provide you with this education to help you on your road to becoming a successful trader. So first of all, I want to talk about the 3 pillars. Now, a lot of people I hear sort of sit there and say, mindset is 80 to 90% in trading. And for a little while, I sort of tended to agree with this. I was very, very firm on the belief that, without the right mindset, that you couldn't become a trader. And I think my foundations for believing this as well was because probably 80, 90% of the people that I came across that couldn't make a success of trading, it was down to the fact that they didn't have the right mindset. And it wasn't really down to the fact that I think it's more down to the fact that people neglect this side of thing rather than just being the main issue. Because it is true that you cannot be a successful trader without developing the right mindset. Okay, and as I say, I've met many people through my coaching that this has been the main issue. However, it's just one pillar of what I call the 3 pillars of trading success. And I believe each and every one of these are equally as important. So in essence, I guess each part of these are a third of what it takes to become a successful trader. The first pillar is risk. And we discussed risk in previous in a previous session. The second pillar, which is also a third, is your mindset and developing that. And we're going to talk today about the issues that people face, why we actually face them, and then at the end we're going to offer a couple of actual practical techniques that you can start implementing to help you develop the right mindset that we talk about. And then the final pillar is strategy. And the reason that okay, Vince, yeah, we're going to talk about that throughout this session. That's what this session is about, is to define what the right mindset is, what we should be doing, what we shouldn't be doing, and also then, as I say, practical techniques in terms of what we can do to put in place to develop that right mindset. So the reason I say each of these is a third is you can have the right risk controls in place, you can have the right mindset, but if you don't have a strategy with an edge, you're not going to be a successful trader. You can have the right risk in place, you can have the right strategy in place, but without the right mindset, you're going to do things which are going to sabotage your trading, and you're not going to be a successful trader. You can have the right mindset in place and you can have the correct strategy, but if you don't have risk controls in place, you're essentially going to eventually blow up your account, and you're not going to be a successful trader. So each of these must be equally as important to create the 3 pillars to build the foundations for you to then become a successful trader. So I speak about risk first, and we've covered that in the previous session, as you must have this in place before you develop the others. There are plenty of strategies out there that work, and it is going to be different for each individual trader. There's no one right or wrong strategy that will work for everyone. It's about finding the right one that works for you and your own individual trader profile, the style of trader that you want to become, and what works for you and around your lifestyle. Mindset for me is the hardest pillar to develop because, and again, I've seen this with this, it goes against natural human instinct. So we're going against things that we have been taught and built and ingrained in us for not just throughout our lives and our education, but actually from an evolutionary perspective, the way that we as humans are built, a lot of stuff that we experience in trading goes against natural human instincts. So it is probably the hardest pillar to develop. The strategy, as I say, there's many out there. The risk is a case of understanding the risks involved and then putting them in place. But actually, the mindset is changing something that is ingrained in us. So it is the hardest one to actually develop. So first of all, I want to talk about the psychology of trading. Now, as I said before, trading goes against a lot of our natural human instincts, but it also goes against societal norms, like what we are taught and built up in society through our education. We're taught that we go to work, we work hard, and we get paid. And generally speaking, we get paid for the hours that we commit to our work. When I worked in London and Hong Kong, when I worked in the city, I went to work and I got paid a salary at the end of the month, no matter what the performance was of the desk, of the company, of the account that I was trading. I got paid at the end of the month a salary, a fixed salary, and that is generally speaking what happens in most forms of work. And that is generally speaking what we are taught to do as we are as through school and education. That is what we are taught that is normal for us to do. However, as traders, there is no guarantee we get paid. And in fact, when we have losing days, we can have losing days, we can have losing weeks, and we can have losing months. And depending on your style of trading, you may even have losing years. And essentially, what we're doing is we are paying to go to work, which goes against what we are taught. So just naturally, from a psychological point of view, it can be very difficult to assess. And you know, especially when it comes, we all still have bills to pay, we still have lives to lead, we still have holidays and luxuries and stuff that we want to achieve and go on. And if we're not having a consistent income, you have to manage that, because psychologically it's very difficult to do that when you don't have a regular stream of income. So it's about structuring yourself properly so that you can still pay your bills, so you can still live the life that you want whilst you're trading and whilst you're going through those drawdown periods. And also, again, this is something that a lot of traders struggle with initially when they're in the beginning phases. They come into the markets and you feel like when you go to work, you need to be working hard, you need to be doing something. So you want to be trading, because if you're not trading, you're not working, and then what are you doing there? That is sort of like the general psychology of people when they start trading. However, as traders, it is often in our interests to sit there and do nothing, especially as a day trader. If the market is not presenting the opportunities as per our trade plan, then we should be doing nothing. And that is the opportunity, the most beneficial thing for us to be doing is to actually do nothing, which again makes us feel uncomfortable, because it's not what we are taught, that you should go to work and you should be active, you should be proactive, you should be productive. Whereas actually it is often in our interests as a trader to sit there and not trade. That doesn't mean to say that we're not doing anything. We're doing our analysis. And effectively what we're doing by not trading is we're managing our accounts. So you need to try and get into the psychology of, well, if the setups as per my trade plan are not setting up, and I'm not trading, that doesn't mean I'm doing nothing. What I'm doing is account preservation, capital preservation, and managing my account and risk. So the other thing is that, and this is where it goes against our even from an evolutionary perspective and natural human instincts, is that each losing trade is a threat and a damage to our ego. Every time we enter a trade, if we have to take a losing trade, that is telling us that we are wrong. So it naturally dents our ego, which will naturally again create an emotional response. Now, this is a natural part of us. So we need to develop a mindset that allows us to not let the result of one trade affect our actions on the next trade. In this session, we're going to look at some of the main issues traders face and offer some practical techniques to overcome them. Now, I just want to make a point on this as well. Notice that I said we've got to develop a mindset that allows us to not let the result of one trade affect our actions on our next trade. I'm not saying that we need to eliminate the emotions. I'm not sitting there saying we need to control the emotions, because those emotions will naturally come to us as part of our natural human existence. So what we need to do is learn a way to not to experience that emotion, but not let it impact our decision making in our trading. Okay, there's a very big difference, because if as some people sort of sit there and think and try and eradicate emotions from our trading, you're fighting a losing battle, because it's impossible to eradicate emotions because they are such a natural part of us. So it's not about eradicating them. It's not about controlling them and removing them. It's about living with them, but just making sure they don't dictate our next decision. Okay, so what traits do we need to have as a trader? So what traits are in a good mindset for a trader? So to become a successful trader, we must develop the following traits. Now, we must be disciplined. Okay, so we must complete our journals. We must follow our trade plan. This is why, again, a lot of people who sit there and say, I don't have time to fill out a trade journal, I don't have a trade plan yet. Well, then the most beneficial thing for your trading in that moment is not to go and trade. If you've got time to trade, then you have time to go and create a trade plan. You have time to go and fill out your trade journal, because that should be more important than the actual execution of a trade. Because if you don't have a trade plan, you don't have anything to be disciplined to follow. And if you don't have a trade journal, you're not being disciplined to be able to analyze your trading and be better. So you must complete your trade journal, and you must have a trade plan. And if you don't, the next time you go and sit down to execute your trades, instead of executing your trades where you're going into the markets blindly, have the discipline to go and complete a trade plan or fill out your trade journal. We need to be patient. We need to wait for the right setups as per our plans. And, that is, as I say, potentially not trading for a while. I remember a time early on in my independent trading career when I was learning to, when I was working in the city and London, I was trading every day. I had always had access to the market. There was always order flows coming through. So I very rarely, very seldomly would have had a day where I had no trades whatsoever. But as an independent trader, that's very different. So I remember there was early on I had a sort of mentor to try and get me through and a transition from being in the city to being an independent trader. And I went through 2 weeks where I didn't trade at all, and I saw other people like making trades, making money and stuff, and I was like, what's going on? Why am I not getting this right? And I spoke to the mentor about this sort of like psychological struggle I was having, and he was like, well, look, why have you not been taking these trades? I explained my rational thought process behind why I hadn't taken them. He's like, fine, you're sticking to your trade plan. That's okay. And then remember the following week, I had 3 trades, 3 winners, and it gave me a bit of an aha moment, a bit of a reminder that, that is why I hadn't traded for 2 weeks. Because if I'd forced something in those 2 weeks, there was a high probability that I would have lost. I would have deviated from my trade plan. I would have not traded with an edge. I would have had a loss, and those 3 winners would have just been covering the losses that I'd had before. Whereas now, after 3 weeks, I was 3 trades in profit rather than this sort of maybe break even or maybe even losing strategy. So we need to be patient. We need to be focused. Okay, and this is another thing that I've come across throughout my years of coaching traders. We should only be trading when in the right frame of mind. Otherwise, we will make mistakes. A lot of people, because it's easier to, if you're unwell, then there's a chance that you may still go to work unless you're feeling really poorly. But sorry, if you're feeling really poorly, you wouldn't go to work. But a lot of people, when they're feeling really poorly, they would still go and trade, because it's very easy to just open up the laptop and trade. But actually, if you're really unwell, you're not in the right frame of mind to be going to work. You've not got the right cognitive resources available at that time to make the right decisions that is going to be advantageous to your trading. So when you're under stress, personal stress, or if you've had a bad night's sleep, or if you're feeling unwell, you're not going to be in the right frame of mind to be fully focused on the market. So we've got to be aware of when we are in the right frame of mind, and only then we should be trading. Be responsible. This is another big thing. You need to take responsibility for your own decisions. The market is not out to get you. A lot of people have this sort of victim mindset around, stop hunting, thinking that the bigger boys are there to take out our stops and reverse, and it's like the market's rigged against us. We need to take responsibility for every single one of our actions, and only then will we be able to improve as a trader and develop the right mindset. That's not to say that the market won't make you frustrated. It won't make you angry. Like I said, all of those things will happen. They will have those emotional impacts on you. But by taking responsibility rather than blaming the market, we are developing the emotional intelligence and letting our ego take those hits to be able to then make the right decision going forward, rather than trying to go into that revenge trade mode, or on tilt, as people call it. You want to have a growth mindset. Every loss is an opportunity to improve our trading. So sometimes, and I say every loss is an opportunity to improve our trading. In fact, every trade is an opportunity to improve our trading. And this is why we must journal as well. And I remember there was a quote or a book or something that I read about a youth tennis coach, and they said that they could recognize the players that were going to make it from a very young age, not from the ones that had the most talent, but for the ones that saw weaknesses in their game and identified it and used it as an opportunity to get stronger. So not every loss in trading is a bad trade, and not every winning trade is a good trade. So we need to. I probably should rephrase that in terms of every mistake is an opportunity to improve our trading. So we need to journal. We need to analyze our trading, and every mistake that we make, and to be fair, when we get this large sample size of data, it's an opportunity to improve our trading. So we've got to have this growth mindset, always looking for opportunities to improve ourselves as trader. Be dedicated, because it will take time to develop the necessary skills. This isn't going to happen overnight. And you need to leave your ego away from the charts. The market is always right. So you need to learn to react to the charts and not what you think. And there's a really good recent example of this, like literally on Monday night. So when I actually posted this on my LinkedIn profile, when Iran started launching missiles at US bases, your first instincts, everyone's first instincts, and I had this discussion at the time with some friends of mine via WhatsApp. The first instinct is, oh my God, this is crazy, escalation, this is really bad for the markets. And I remember switching my charts on, and oil was going down. Now, if you read the headline, Iran attacks US, you're going to think escalation, the price of oil must be going up because of the dangers that it creates in terms of the regional issues and global supply. But the market was going down. And straight away, I was like, right, okay, so they're seeing this as the markets, and you've got to remember, we as humans are emotional, the markets are rational. So even when the market was doing something that your emotional mind is telling you it shouldn't, there is a reason behind it, so the market is much more rational and it will be right. And the reason was they saw it, and I even said this to my friends at the time, there'll be a ceasefire soon, because the market was predicting and showing that it was a choreographed response, a face-saving exercise for that choreographed response between, as it sounds like, Iran, Qatar, US, to show a sense of force from Iran, show a sense of the fact that they had reacted and responded, but it done it in a way that allowed for de-escalation straight away afterwards, so that we didn't have to close the Strait of Hormuz for the to affect oil supply. There was not going to be any wider regional conflict within that. It was going to be it was a pathway to de-escalation, which is why the markets reacted in the way that they did. So again, you don't. People would have gone into, a lot of people would have read the headlines, gone, oil's going to go up, I'm going to go and buy oil because it's going to go through the roof, World War III is coming, market's going down, and like, oh great, I'm going to buy, without actually realizing that the market is right, because the market is predicting in a much more rational way the future. So that's a really good thing to think about as well. You leave your ego at the charts don't care what you think, you read the charts and let the market tell you what is happening. Okay, any questions before we move on? Hopefully you're finding it and following this so far. Okay, Emmanuel, so you're still struggling with how to read the charts, so you're losing. Okay, so that one you really want to go and look at the sort of price action charts, the price action session that we did at the beginning of this sort of few weeks ago, and we will be covering strategies in a few weeks' time. I believe actually as well, just I know a lot of you have mentioned about live trading sessions. So the next session, the 7th of, I believe it's the 7th of July. If VT Markets, if you could just, if Anne, if you're there, if you could just confirm for us that I believe it's the 7th of July. I'm going to be hosting a live trading session, so please do not miss that session. I know a lot of you have been asking for it. We're going to get one in before the sort of summer lull in the markets. So the next session will be a live trading session. How about the feeling of missing out? How to address it? It's a great question, Ace, and it's something that is very, very relevant, and we're going to cover that right now. Okay, so as we've already, sorry, 8th of July, so it will be happening on the 8th of July for the live trading session. So as you can see there that the link to register for the next session is in the chat box there as well. Right, okay, so emotions. So it is important to understand that we are not trying to remove our emotions. As I've already mentioned, they are a natural part of us and we should embrace them because they are there to protect us. Naturally, they're there to protect us. All emotions are temporary. Nobody's ever stayed angry forever. Nobody's stayed frustrated forever. No one stayed happy forever. Like, we do experience emotions, they come and they pass. So we need to learn to recognize them and then let them pass before we act impulsively on them. We need to learn not to let them hijack our decision-making process. So we need to feel them, identify them, and then not let them dictate our next decision-making. Because most of the issues that we come from trading around our mindset come from allowing that emotion to dictate our next trading decision. So emotions generally come through experiencing losses or a string of losses. We can also experience emotions through experience big winning trades. So that is also a big threat to us. So it's not just, a lot of people associate the negative emotions in terms of like going through losses, but actually when we have a really good winning trade, we can feel that adrenaline, which can give us overconfidence, which can actually also go on to creating negative results in our trading. So we also go through frustrations of missing out. So that's that FOMO that you mentioned, Ace, on a trade or even potential profit on a trade. So when we're experiencing emotions, it often results in revenge trading, over trading, over leveraging, and essentially poor decision making and poor execution of trades, and therefore that leads to losses on our account. So the emotions that we are likely to experience in trading, FOMO is one of the big ones. This is the fear of missing out. It's a very common emotion, and it leads to traders getting into trades through fear of missing out on potential profits on a trade or missing the trade altogether. So this would be like the market comes, just misses your entry point and then starts moving in the right direction. So you feel like you're missing out. So you jump in, but actually all of a sudden now the market has, you're in like a bad execution, you're in a bad entry, and now your risk to rewards out, your edge is gone, and the market then starts coming back and would have hit your entry point anyway. Or, often quite people will hit their profit target, and then the market will carry on and they feel like they've missed out on all of those profits. But it's important to realize that you have a profit target for a reason. What happens in the market after that is irrelevant. You have your plan, you have your entry, your stop, and your take profit targets. They're there to create an edge. After what happens with that, it's irrelevant. You then just move on to the next trade. So frustration, this comes from making mistakes, coming out of a trade and seeing the market continue in the same direction, or being stopped out only for the market to reverse and go in the direction you had wanted. And this is that sort of stop hunting scenario. We're going to talk in another session about why this happens, this stop hunting phenomenon, and also not just and again, this comes back to that taking responsibility rather than falling into the victim mindset and sort of sitting there thinking, oh, the market's out to get me. If we see a repetitive pattern, use it to our advantage. So we're going to talk about actual strategies and how we can see this, identify this, and then create strategy to profit from this happening. Greed, we feel this when the market is moving in our direction and we do not come out of a trade at a designated profit target. So the market moves quickly towards our profit target. We're like, oh my God, we've caught this move. We need to carry on and don't take our profits, and the market comes back and stops us out or stops us at entry. Now, I'm not sitting there saying if you catch a really good move that you shouldn't leave a portion of your trade to run and maximize profits. 100% you should be doing that, but you shouldn't be leaving your whole top. You should be scaling out of your trade to book in profits as well, manage your risk. So Emmanuel, apparently again, so in terms of reading the charts, that's in other sessions, which the VT Markets team have put the link into the chat box, so you can watch previous sessions where we talk about how to read charts in the impulsive corrective session. So anxiety, and again, this is another real natural human thing. So when we see profit in our P&L and we are in profit, we get an emotional attachment to that money. So as soon as it starts going back, we feel anxious because we feel like we're losing money, even though that profit hasn't ever been realized and it hasn't hit our take profit. We feel anxious because we see this profit on our account, and then it starts going back, and we feel this emotional attachment to that money. So it's a natural, but this is a natural cycle of a trade. It's going to go into profit, it's going to go into loss, it's going to go into profit, it's going to go into loss, it's going to go into profit, it's going to go into a loss, it's going to go into profit, it's going to come back to break even, and then go on to hit our target, or maybe even hit a loss. That's a natural cycle of a trade. Not all trades will go straight to their profit target. So we can feel anxiety when we're in it, and that is the reason why. Loss avoidance. So we want to avoid taking a loss to protect our ego. Again, it's going back to that natural instinct. Every trade is a threat to our ego. So when we try and do this, we try and avoid the loss by keep moving the stock back and back and back, taking on more risk because we don't want to realize the loss, because by realizing that loss, we admit that we are wrong, and that is the dent to our ego. So we want to try and avoid doing that. And finally, one of the other ones is hesitancy, often experienced in losing streaks, where we have an entry point, but when the market gets to our entry point, we hesitate because we fear taking another losing trade. We've got a real severe lack of confidence in our strategy. So we want to avoid taking a loss, because by entering the trade, we've got to potentially take another blow to our ego. So we don't enter because we want to try and protect ourselves from taking another loss. But actually, again, through trade journaling and back testing, we can create a wider picture of our strategy to make sure it has an edge, and therefore hopefully give some confidence into what we're trying to achieve. A couple last ones. Hopium. This is where we continue to move our stock, taking on more risk in pure hope that the market. This is not a real one. This is a made up word for me that I've made. It's where we hope that the market will move in a direction. It means there is no indication from the market. There's no rational thought process behind it. We're literally just hoping that the market's going to turn in our direction. This is another one going back to that developing that patience. Boredom, a lack of patience, and we enter inopportune trades to try and experience the adrenaline of being in a trade out of pure boredom. So this is when you're sitting there feel like you're doing nothing because you're looking at the charts and there's no setup. You just get bored and you want that adrenaline rush, so you just enter a trade just to try and get that kick. And that is what we need to try and avoid. And one that we touched on before, overconfidence. So we experience a series of winning trades and feel like our strategy cannot lose. Then we start increasing our leverage, putting more on the next trade, and eventually we take poor trades or we take a bigger loss and we erode our edge through over leveraging. So we want to create focus. Now we're going to talk about the things that we can put in place to make sure we create the right mindset. We want to sit down for our trading session. We have to be fully focused. A lack of focus will lead to mistakes, and we should be looking to create the optimal environment for peak performance, which is free from distraction and allowing us to be fully focused on the markets and at the task in hand every time we sit down to a trading session. So what sort of things can we do to create focus and create this right mindset? Well, first of all, we want to try and build a routine. Build as many processes into your subconscious as possible. Okay, so we want to try and make sure that we naturally do something. So we only have a finite number of cognitive decisions that we can make in any one single day. Okay, otherwise we get tired. So we want to build a routine so most of it becomes natural to us, so we don't have to waste our cognitive resources on making mundane decisions that could become natural. So you want to create the right environment, which is an area free from distraction. Remove phones. Okay, in the world we live in today, it's very easy. Like, you know, the market's coming down to your level, and you get a WhatsApp message and you're straight on your phone, and then all of a sudden you look back and the market's gone away from you. Okay, that is a natural thing. So you want to try and create somewhere that's free from distraction. That means creating an office environment. You know, when I used to have my office in my house, when my children came along, I decided to create an office outside of the house. So I converted an office in my garden to make sure that I have somewhere away from the house so that I'm free from distraction when I'm trading. When I'm trading, I need to be in the zone. Clear and concise trade plan, as it creates focus and clarity on the edge that you have developed, and how you can execute that plan to make yourself a profitable trader. Small number of strategies. Again, when people first start, and I've seen this a lot, that they try all these different strategies and they have a variety of strategies. But the problem with that is often the strategies will contradict each other. So you're in a trade and all of a sudden you're getting a signal from a different strategy that you're looking at, which goes against the trade that you're in. And it's like, it creates confusion. And therefore the best traders that I know only have one strategy and focus their cognitive resources on executing that strategy flawlessly. Okay, and I am I am the same. I probably you could probably say that I have two strategies, but both of them are based on the same ideology and the same theory. Okay, so you want to focus on one, maybe two strategies at most. Really focus on becoming the best at that strategy and then execute that flawlessly. Journal, again, it allows us to analyze our performance and focus on the areas we can improve. Living a healthy lifestyle. Now, I'm not sitting there saying that, you know, you can't enjoy the odd sort of like drink here and there, or a bit of junk food, like, you know, or something like. I'm not saying you have to have a really clean living lifestyle, but supporting a healthy lifestyle will help you within your trading because it will support cognitive function as well. So something that supports focus. This can be healthy eating, exercise, and correct sleep patterns. And again, it goes to the thing whereby if I'm having, you know, if I'm a big football fan, I'm a big Tottenham Hotspur fan, and so occasionally I will go to a football match in the week and I won't get home till midnight. You know, I'm not going to then be up at 5 o'clock in the morning, 4:30, 5 o'clock in the morning, and be as switched on as I normally am. So on those evenings or on those mornings, I may not trade because I'm not going to have had the right sleep. So it's not that I need to always constantly get it, but it's about making sure that when I am trading, I have the right things in place, or I have been doing the right things to put myself in the best place in that moment. And if I haven't been for that period of time, then maybe I don't trade for that session, and then I wait till the next session where I have got those right things in place. And I'll discuss this probably in another session in a lot more detail around how through coaching people, I've actually made them profitable traders by changing. You know, I had one guy who we worked out that he was he was profitable in the mornings and losing money in the afternoons because he was having a heavy lunch, which made him tired in the afternoons. And that was literally all we had to change. Either change your lunch and stuff, or stop trading in the afternoons. It was one of those two choices. So we can really do those sorts of things in terms of identifying healthy patterns. Mindfulness and meditation. I'm going to talk about this in much more detail in a moment because I'm a big advocate of this, not just in trading but in life in general, because it helps support focus and identify when you are not in the right frame of mind to trade, and you can then remove yourself from the situation before you even make a mistake. And this, for me, is the one biggest thing that will allow you to identify your emotions and live with them, and then move on and not let them hijack your decision making. I've got just a couple of questions here, and then we'll get on with the last bit of this this session. So how about take profit is not being hit yet? Like, my priority is to protect my capital and to gain some profit to eventually increase my capital. When I do that, I sometimes miss bigger profits. Yeah. So again, there you're feeling that anxiety, Eliza. I hope I pronounced your name right. So you're experiencing that anxiety. So again, there's two things that you can do. One is to try and set and forget. So, because basically it sounds like what you're doing is you're living every moment of the trade. So you're watching every tick and feeling every emotion. So you're building up these emotional responses. So you almost need to try and enter your trade, walk away, come back, and only visit it at different periods of time, or set alerts to come back only when it hits areas of the market that you want to manage the trade. Or mindfulness and meditation will help with this as well. And we'll talk about why in a second. Okay, so Emmanuel, we can cover that in another session as well about the candlesticks. I was into the pound news. Okay, so Nizam, yeah, we can cover that as well at the end of the session around funding. Okay, so mindfulness and meditation in trading. Mindfulness is a powerful tool to help us develop the right mindset as a trader. A lot of successful traders that I know have some form of meditation or mindfulness built into their trading routine because it's about becoming aware of the environment around you in that moment. So again, it's about in that moment recognizing the emotions that you were experiencing. So rather than the having the emotions, reacting, and then later realizing that you've reacted, it's about understanding that you have feeling that emotion straight away, and then once you've recognized that you're feeling that emotion, you can put processes in place to stop yourself from acting on it. So it helps develop emotional control. So we're going to talk about the intuitive and the deliberative sides of your brain, two parts of the brain. The intuitive part of our brain is the side that acts impulsively without thought or reason. The deliberative part of our brain is the one that reasons and comes to a decision through a rational thought process. Now, our minds are naturally lazy and they will always look for the easiest solution, which will engage the intuitive part of the brain first, because it will be right. I'm feeling angry. I need to act on that. That's the lazy part, because it's like, right, I need to go and I need to go and tell the market I'm right. That is the lazy response to it, because it doesn't have to then deal with the emotion. Okay, it's just trying to get that emotion out. So it allows the emotion to react. And again, there's nothing wrong with that in the sense that it is a natural part of our human instincts. However, obviously, it does impact our trading negatively. So as traders, what we need to do is we need to engage the deliberative side of our brain to be able to come to a more rational thought process. So even by engaging the deliberative side of the brain, we can still feel that emotion, but make a more rational decision whilst experiencing that emotion. Okay, and mindfulness really, really helps with this. So just 30 minutes of practice of mindfulness physically changes the brain state and improves that emotional intelligence and emotional control. It engages that deliberative side of the brain, and it allows us to recognize emotions we are feeling quickly before we allow them to hijack a decision making and then act upon them. So rather than acting impulsively straight away with that intuitive side, it allows us to recognize it and then not allow it, the decision to the intuitive side of our brain to hijack and make the decisions for the next decision for us. So it strengthens our decision making. Also, it improves our pattern recognition skills when we're actually trying to identify patterns in the charts. And it also helps us recognize negative self-talk that sabotages personal performance. So often people, go through a hot streak and they will self-sabotage because they sort of subliminally and subconsciously think they're not worthy of making the profits from the trade. So they actually self-sabotage. But if we can recognize the negative self-talk before we actually act upon it, then it can help improve our performance as well. Now, outside of trading, studies have shown that it can lead to healthier glucose levels, which help fight eating disorders. It reduces stress, which obviously will benefit trading as well. It can improve and develop emotional intelligence, which again helps trading. Better quality of sleep, again, could help your trading. Lower anxiety and depression levels, especially who was it earlier on that was saying about so Elisa, you were saying about feeling that anxiety in the trade. It can help reduce that anxiety if that you're feeling within the trade. And this one, when I read this, I was blown away. But research has shown that it can actually have a positive impact on breast cancer patients. Just being mindful and less stressed can actually improve your had a positive impact on breast cancer patients. So those are some scientific studies which have proven mindfulness and meditation can have outside of trading as well. So as I say, I'm an advocate of mindfulness and meditation in all aspects of life. Just being able to find 10 minutes a day will have a huge impact. Now, ideally, if you're doing it for your trading, you would do it before your trading session. I do it before my trading session. It actually allows me to identify whether or not I'm in the right frame of mind. And if I'm not in the right frame of mind, I can remove myself from that trading session before I even enter it and make a mistake. So I can actually, it can be done as a preemptive situation from avoiding making mistakes. Now, you cannot be good or bad at practicing mindfulness and meditation. A number of times that I have had people come to me when they start their mindfulness and meditation sort of their practices, and they go, you know what, my mind was all over the place. I was distracted. I couldn't really follow it. So it's just like I can't. I'm not really very good at it. And it's like that is not the point. You cannot be good or bad. What you're doing is you're developing the sense, like, and minds are natural busy. Even now, when I enter my mindfulness sessions, excuse me, before trading, sometimes my mind's all off. It's being distracted. But what I'm doing is I'm training my brain to, even when it's distracted and it gets emotional, I'm anchoring it back to being in the present. And the more you do it, the more you will notice, the quicker you will notice when you're distracted, and you'll be able to bring yourself back to the present. Okay, so there's some you can't be good or bad at it. You need to be consistent with it as well. You can't do it Monday through Wednesday and then take 2 weeks off and then do it another day here and then take 2 days off. Like, it needs to be consistent. I would say you want to be trying to do it at least 5 days a week, and for 10 minutes a day for it to start having a real material impact. And finally, I want to talk about visualization. Now, visualization is a really powerful tool that we can use alongside mindfulness. We can use it to preempt situations and train ourselves to act in the desired way. We can also use it to change our feedback loop if we keep making the same mistakes. I'm going to go through a couple of examples of this as well. And by using visualization, we can create and change our feedback loop so that it becomes the default action when faced with a similar situation. Now, first of all, I'm going to talk about a story that I love, and it's away from trading, but it's going to demonstrate it very powerfully. And then I'm going to link it to an example in trading. So I'm not sure if any of you are mixed martial arts fans, but there's a guy in the UFC called Conor McGregor. I don't think he fights anymore, but Conor McGregor, he was the world champion. But when he started out, he was put in a fight against a guy called Jose Aldo, who had been undefeated for years in mixed martial arts, which is incredible, really. And in the build up to the fight, Conor McGregor was saying to Jose Aldo, "You're going to overextend with your right hand, and I'm going to knock you out, or overextend with your left. You overextend, I'm going to knock you out with one punch." And it was like, this guy was like, whatever, like, I haven't been knocked out before, whatever. It's like literally 7 seconds into the fight, Jose Aldo overextended, and Conor McGregor caught him and knocked him out and won the fight and became the world champion. Now, it wasn't some sort of mystic prediction or anything like that which had created this situation. What Conor McGregor had done was he'd identified a weakness in Jose Aldo's armory, and he'd visualized himself thousands and thousands of times in the situation whereby Jose Aldo extended and he was going to throw the left hook and win the fight. Now, by visualizing that, he'd created it in his mind. The mind does not distinguish between what is real and what isn't. Okay, and what he'd done was he'd visualized it so many times that when he was faced with that situation in real life, his mind and his body already knew exactly what he wanted to do, and he reacted straight away to win the fight. So he almost trained himself that in that scenario, that's exactly what he'd done, even though he hadn't experienced it physically before. So what we can do is, when we make a mistake, we can put ourselves back in the same position using visualization and visualize us taking the desired action. Doesn't even need to be making a mistake. It can also be forward thinking. So if we've got a strategy, so say we're suffering from that hesitancy, or so, okay, say we feel angry in a trade. Okay, so we experience a loss, we feel angry, we jump into another trade straight away. Okay, what we need to do is, at that time, our feedback loop is, I experience a loss, I feel angry, I revenge trade. That is the only experience your mind and your body has, because it's the feedback loop that it's engaged with. What we need to do is put ourselves back in that situation through visualization. So through when we're in that mindfulness practice, sit there and visualize ourselves back in that situation, taking the loss, experience how we felt in that moment with that anger. But rather than taking the next trade, we need to experience ourselves, right. I feel angry. I'm going to get up and I'm going to walk away from the screen. I'm going to stop myself from executing that next trade. I'm going to walk out my office. I'm going to go, make myself a drink. I'm going to go for a walk. I'm going to go for a run. I'm just going to go and sit down. I'm going to do some mindfulness. I'm going to do 10 minutes of mindfulness. I'm going to do some breathing techniques, whatever it may be, to bring yourself back to a rational point. Because what you're doing by doing that is you're engaging your deliberative brain. You're going away, allowing the emotions to pass before you come back and then make the next decision. Okay, so when you're sitting there and you visualize yourself, right, I have experienced a loss, I'm angry. Instead of doing that, I'm going to do this. You've now given your mind a different feedback loop, an alternative feedback loop. So the next time it's faced with a very similar situation, it has two options. It can do the same thing again, or it can do the desired outcome, which is to walk away and engage that deliberative brain. Now, I'm not sitting there saying every time you're faced with that situation, you're always going to do the desired outcome. There's still going to be times when your feedback loop will engage, your intuitive brain will engage. But the more you visualize yourself doing the right thing, and the more you then do the right thing in action, it will become the dominant feedback loop, and therefore it will become the default action when you're faced with very similar situations. So it's a very, very powerful technique that we can use in conjunction with mindfulness to correct mistakes and give ourselves the opportunity to overcome them. So it's not to say that we're not going to make those mistakes, but by doing them, we eradicate them. We slowly over time eradicate them. Okay, guys, so that is the end of the content and the session. We've got about sort of 5-10 minutes left for any questions. So I'm going to go through the ones that we've got here, and then fire away, and then we'll get on to we'll close the session. As I say, you can open a live account with VT Markets through that QR code on screen, and we would ask you to stay on for a short survey at the end, just to give us some updates on what you'd like to see in the sessions, some feedback on the sessions, and also please do register for the session in a couple of weeks, which is the live trading session on the 8th of July. Okay, so can you tell me anything about, so this is from Liam, can you tell me anything about the fear of execution? Many times I have a good setup, but I'm just too afraid to be wrong again and have a losing trade and lose the best trade of the day. Now I'm entering more from a feeling of looking the market and how the price behaves. So yeah, again, Liam, so that goes back to you need to create the edge. You need to be able to have the data to know that your edge is there in the market and in the strategy. That one will give you the confidence. And second of all, once you've got the confidence in that strategy and that your trading plan has an edge through your back testing and through your journaling, then what you can do, if you're still experiencing hesitation, you can go through that visualization that I spoke about in terms of, right, okay, I missed that trade because I'm fearing losing again. But again, two things. One, you can put yourself back in that situation, visualizing being in the same situation and entering the trade because you know that your trade has an edge. But second of all, sit there and experience it, like visualize yourself experiencing the loss and feeling okay with it. As traders, we all experience losses. Okay, it's about how we react to them, and it's okay to lose trades. We all experience losses, so it's about feeling that loss and then being able to move on from it, and letting it go, and maybe visualize yourself almost manually, psychologically taking that trade out of your head and throwing it up and throwing it in the bin, like visualizing getting rid of that trade. Now, as I say, you need to analyze it properly to make sure that your strategy has an edge, because if your strategy doesn't have an edge, then you're just taking losing trades because your strategy doesn't have an edge. So you need to go through the journaling and the back testing to make sure your strategy does have an edge. But if it does, then it's about giving yourself the right platform to be able to take those trades through that visualization. Okay, so I've got a few questions coming in here. How does one reach the previous recent sessions recordings? That was on a link earlier on that the VT Markets team put through. Do you have one-to-one sessions perhaps? I do through my my trading company Keyzone Traders, but yeah, not here today, I'm afraid, Nizam. Okay, so the events team there, Anne, has kindly posted the previous webinars again. Yep, so Stelios live trading in future webinars. That will be in the next webinar in 2 weeks' time, 8th of July. Please do come to that session. You can register again on the link there, posted by Anne. Does VT Markets include a web platform to trade, buy or sell interface built in the news, or is it third places? I think I've lost 8% in past pandemic was left a trade again. Yeah, so Darwin, so having experienced large losses, I would go back to sort of like you need to sort of go to demo trading really. I would sit there and say go to paper trading, develop the edge. A lot it's very difficult to understand exactly without speaking to you in person and finding out more about what is causing those losses. Is it that you don't have a strategy and you're just trading randomly, or is it that you have a strategy with an edge and then your emotions take over and then experience those big losses, like moving the stops and those sorts of things. So without understanding exactly what's caused those losses, then it's very difficult to determine. But I would go back to those three pillars, understanding risk, develop the mindset, and the strategy. So make sure that your strategy has an edge, and then work on the mindset. It would need to be a bigger conversation to really understand exactly what's caused those losses to be able to help you specifically. Yeah, so Nizam, so you're saying, okay, yeah, so fund the account with 500, you just obviously 10,000 ZAR, so how do you work past that? It's very difficult, to be honest with you, in terms of like, you need funds to make money in trading. Realistically, what you need to do, I mean, if a mentor is asking you to fund an account, that to me would be a warning sign anyway. Like no mentor should be asking you to put money into an account, okay? You should be finding a broker and that on your own back, that you've done due diligence on yourself, and then deposit the amount that you can afford into that broker, and then you trade with the amount that you can afford. No mentor should be telling you that you need to be putting a certain amount of money into an account. Any mentor should be, if you haven't got money to put into an account, they should be teaching you to trade the principles on a demo account, and then building into the live environment. So I think from that point of view, unfortunately, it would be a warning sign if any mentors asking you to fund an account directly. In terms of how do you work past the capital issue? We can compound our account, something called compound. But ultimately, initially, we really need to focus on developing the edge and developing the strategy, and then we need to worry about compounding. And compounding, once it comes in place, can actually grow your account quite quickly. But yeah, any other questions, guys? Right. Okay. I mean, in that sense, again, if that is his minimal amount, and you don't have that amount to fund, then unfortunately, probably not the right mentor for you. You just find a mentor. There's plenty of mentors out there that do not require minimum amounts for somebody to be trading, because a mentor will be teaching you the principles of trading. To develop yourself, not based on a minimum amount. So I would the only way around it is finding a mentor that will teach you without those limitations, I'm afraid. Or you need to, again, start with what you have, try and find the edge, develop that, compound that to the amount that you have, and then go to that mentor. But like I said, for me, that would be a bit of a warning sign. I would want a mentor should be taking you from where you are, rather than that, like I say, maybe it's just not the right mentor for you at that time. Okay, guys, so we are running up to the hour. I'd be more than happy to or look forward to the next session. If you have any other questions, please pass them through VT Markets. But yeah, other than that, have a great rest of the day. Please do stay on just to fill out that survey briefly. It would really help us plan the future webinars. And I will look forward to seeing you all again in a couple of weeks' time.